Welcome to Dollars and Cents, hosted by Sanjiv Gupta, CPA. Dollars and Cents is the show about growing more of what you are making, saving more of what you are growing, and making more of what you are growing and saving in the most sensible and tax efficient manner possible. Feel free to call into our studio number to be live on air with your questions. Call 408 912 5038. That's 408 912 5038. And here is your host of Dollars and Cents, Sanjiv Gupta, CPA.
Good evening, friends. This is your own CPA, Sanjiv Gupta, CPA. Today is April 13th, and we are 5 days away from the tax deadline, which is happening on April 18th. And that deadline is meant for individual tax filers, C corporations. Of course, single member LLCs don't have to file for the federal, but they have to file for the state. And also FBAR, foreign bank account report filing, which is due on April 18th. So listeners, if you have any tax question, as I said, it's only 5 days remaining for the tax season to be over for the tax year 2021. Any tax question in your mind, you have any problem on your tax returns, you can connect with me live on air in the studio, Sanjiv Gupta CPA, giving the show 408-912-5038. 408-912-5038 is the studio number. You can connect with me on air. You can ask your tax questions. I know a lot of people are looking for answers to their questions. They're trying to do online with their CPAs, with their tax professionals. A lot of questions do come in, and they struggle with that question. In fact, we have seen an increase in the client base always when it comes down to the dead end of the tax filing. And we always hear that from the clients saying, "Hey, I was doing taxes online, and I'm stuck with this question. I'm stuck with that question." Or they say, well, we have that issue, and we are not able to connect with any CPA on air or a CPA in the office, not on air. So this is a time to connect with me, Sanjiv Gupta CPA on air, bringing this show every Wednesday, 6:30 to 7. 408-912-5038 is the studio number. Tax time is coming in very fast, 5 days remaining. We have a caller here. Let me take this call. Good evening, Sanjiv Gupta CPA.
Hi, this is Amit here.
Yeah,
I have a question for single member LLC, Form 568.
It's 568. Yeah. Mm-hmm.
Yeah. So, I have a company which is registered in New Jersey, and now for the past 3 years we have been operating here from freelance income and all. My question here is, this Form 68 needs to be filed with that $800, tax liability or the fees in conjunction with, filing getting it registered here, or that will suffice the requirement if we file the Form 68.
568 is required to be filed here, but before you file the 568 form, make sure that you do the foreign qualification of the LLC with the Secretary of State here. That is required because you being a single member owner of that LLC registered in New Jersey, and you are here in California, so you have to get a foreign qualification done with the Secretary of State. Now, when you do the filing for the 568 form, you will not be having a California number. So what you can do on the tax returns, you can always say applied for something, and we can file it, and once they get the number, make sure that you update on your tax return. Now, a lot of times we have seen that issues with the FTB not coming out with all those things and not crediting the payments and other things on your 568, because LLC is subject to LLC fees and also subject to $800 tax. So I will suggest you, once you file that return, it's important to connect with the FTB and make sure that it is in the system. Otherwise, there's always a problem, and that problem not comes now. It comes to 2 to 3 years with additional penalty interest. So just connect with them and make sure that return is filed. Okay.
Okay. So this needs to be filed even if the registration has not happened, transferred to California. But I think we need to file the form before.
Yes.
In this file.
Yes, you need to file the form to avoid that $800 penalty interest that can accumulate, and it can grow to $1,000, $1,500 or more.
Got it. Okay. Thank you.
Thank you very much for the question. Listeners, this is Sanjiv Gupta CPA. It's tax time. Tax season is 5 days remaining. A lot of tax questions are there in the mind of each person. So 408-912-5038 is the student number. Connect with the CPA on air. We have a caller here. Let me take this call. Good evening, this is Sanjiv Gupta, CPA. Hello. Good evening, this is Sanjiv Gupta, CPA.
Hi.
Hi.
Hi, good evening. Can you hear me?
Good evening. Good evening, Ji. Good evening. Go ahead with your question, please.
Hello?
Yeah, I'm hearing you. Yeah.
Hello?
Yeah. Can you hear me?
Hello?
Can you hear me now? Hello. You can call me back. Again, the studio numbers, studio lines are open. Studio number is 408-912-5038. Let's take another call. Good evening, this is Sanjiv Gupta, CPA. Hello. I think that call also dropped. So 408-912-5038 is your studio number. Like I said, the tax season is 5 days from now. Of course, a lot of questions have come in. Like we have a caller here. Let me take this call. Good evening, this is Sanjiv Gupta, CPA. Hello, sir. Good evening, this is Sanjiv Gupta, CPA. I think you're driving. I can hear the sound of your car on the road. But anyway, you can call us back 408-912-5038. My firm, Sanjiv Gupta CPA, has 3 offices in Fremont, Sunnyvale, and Pleasanton. We have a team of experienced CPAs and CAs and EAs, and they have been really working very hard day and night to satisfy all the clients' filings, and they have done a wonderful job in this tax season. Hats off to them working so hard. Without their support, I will not be here talking to you guys. So thank you for all the support these people have provided in my office. Of course, this is a time for if you have you need a last minute tax filing requirements, we can look into it whether we can do the filing or we can file extension for you. We're going to cover a little bit about extensions right now because it's important to understand the extension part, how to do it. And also remember that deadline is Monday. So our show is on Wednesday. So maybe I will not be able to talk about the extension that time, but I want to cover a little bit about extensions. I have a caller here. Let me take this call. Good evening, this is Sanjiv Gupta, CPA.
Hello, Sunny sir.
Yes, sir. Yes, go ahead with your question, please.
Yeah, so question is, my wife is actually not working. She is a housewife. Can I open a traditional IRA for her name?
Yes, definitely. We can cover traditional IRA. There's spousal IRA, we call it, for non-working spouse. But you have to follow some guidelines. You have to make sure that your AGI income is within the qualifying limit. It should not be more than, I think, 250 or 300K. If it's that, then there's some limit. Of course, you can do spousal IRA, but you can be decreased to a certain extent. But you can try to do spousal traditional IRA. You can definitely do that for her. Okay.
Okay. Thank you so much. Thank you.
Thank you. Really appreciate. And listeners, if you are looking to reduce your taxes and want to look into IRAs, 401ks, you can look into traditional IRA if it gives tax benefit. Otherwise, you can do a backdoor Roth if you're not able to contribute directly to Roth, and the deadline is April 15. It's better to start now. So backdoor Roth is definitely a very good technique to grow money tax-free in the Roth, and this indirect way of doing it. Build Back Better plan by President Biden wants to take away that benefit. Maybe this year is available, maybe not. We'll see how this year folds up. We have a caller here. Let me take this call. Good evening, this is Sanjiv Gupta, CPA. Hello. Good evening, this is Sanjiv Gupta, CPA. Hello, sir. I think calls are dropping, so that's fine. So again, the studio number is 408-912-5038, 408-912-5038. And listeners, last minute tax questions. So just go ahead and call the studio number. So I was talking about extensions. So the form that we use for filing extension is 4868 for individual tax filers. For C corporation, of course, if you are a C corporation, we have, like I said, we have a deadline on April 18th. The form is 7004. And for single LLCs, of course, it goes to your personal. There's no for California, there's no extension for 568. It's automatic extensions. California, we always have automatic extension, whether it's individual taxes, whether it's corporate taxes. There's no form that you need to go with California. It's all automatic extensions for California, so don't worry about that part. But what we have to worry about filing extension is about the estimating the taxes with extension. Remember, extension is for filing the taxes, not for payment of taxes. That's the difference there. We have a caller here. Let me take this call. Good evening, this is Sanjiv Gupta, CPA.
Good evening, sir. This is
Good evening.
Raj.
Yeah,
Can you hear me?
Raj, yeah. Go ahead with your question, please.
I had question like my part of my compensation comes in like stocks, and I wanted to know like how is the tax bracket for stocks? It's seemingly higher than what I expected, and is there any way to reduce the taxes on the stocks which get vested next year?
Yes, definitely. There is a lot of planning you can do for lowering taxes for when it comes
Okay.
to compensation W2 income. Now, whether the compensation is in cash or whether compensation is in kind like stocks or whatnot, it's still a taxable event. You still see on a W2. Of course, you can look at planning sessions. We are going to have very shortly the tax planning for half yearly tax planning for people like we are planning in the month of July. You can go to my website sanjivcpa.com, sanjivcpa.com. There we are doing a webinar. It's a tax-free webinar. It's not tax-free. It's a free webinar. See, I'm so much into taxes, so it's a free webinar. You can register on my website, and I'm going to give you all those pointers as we come into this half-yearly season for 2022. Okay, you can look into that.
Okay. And in general, like thank you for that. In general, like do you expect uh payments like advance tax payments should be done for
Yes,
those
yes,
who okay.
definitely should do advanced tax payment. Reason for that is when we do the when we do the withholding taxes, when we do on W4, we take out only 15 to 20%. Most cases we have seen that, uh, but when you combine your income, it's more than 20%. It comes to 30% to 40%.
Yes,
So it's
exactly.
important that you do
Yes.
some advanced tax estimate, and advanced tax estimate is due on April 18 as well. So what I will suggest you, whatever increase in there in compensation, you can multiply by 25% of that increase and pay over four installment, April 15, June 15, September 15, and January 15 of next year. Okay.
Thank you. And we can pay on IRS website, advance
Oh
tax
yeah, yeah.
payment.
IRS.gov
Okay.
online is very simple. Earlier it was tough.
Thank you.
Now it's very simple.
Thank you, sir.
Thank you very much for your question. And definitely we have one more caller here. Let me take this call. Good evening, this is Sanjiv Gupta, CPA.
Hi, this is
Hi,
Vivek. Hi, I
Vivek.
just
Go
had a
ahead.
quick question. So if both partners are kind of working and based on the AGI, do you also offer tax planning services like to kind of how to reduce the taxes and also probably investment opportunities based on the AGI?
Yes, we can look at the options of reducing taxes from the point of view of the AGI for each
Uh-huh.
partner. We can look into that, but of course,
Uh-huh.
we are licensed tax professional CPA, but we
Right.
cannot advise you on the investment side that you have to connect with a licensed like CFP or investment advisor. But if you are
Okay.
looking for a wholesome package, we can connect you with our team and a network
Right.
of people who work with my clients. So you can always
Uh-huh.
connect me after the show. We can always give a call. We can, or after tax season is over April 18th, we can set up a time and for me and my network person to come together and they can discuss with you on your total scenario. How about that?
Yes, absolutely. That'll work. That'll be great. That'll be great.
Okay. Thank you for the
All
call.
right.
Really appreciate.
Thank you so much.
Thank you so much. And we have a caller here. Let me take this call. Good evening, this is Sanjiv Gupta, CPA.
Hi, good evening,
Good
Mr.
evening, sir. Good
Gupta.
evening.
I have a
Yeah, go
question
ahead.
for you
And
on foreign tax credits. So
uh-huh.
if you sell a
Go ahead.
stock or get dividend in a foreign country, you pay foreign taxes on it, and that shows on the 1099 that the broker sends. And most of the online software gives you a choice between a deduction and a credit.
Right.
Now, of course, if credit is considered more valuable, and if you take a
Right.
credit, there
Right.
starts a calculation between the simplified election for AMT calculation or the more
Uh,
complex one.
right.
Is there an advantage to one over the other in this AMT
In,
calculation,
in fact,
choosing the
very,
simplified
it's
versus
a
the more complex one? Thank
yeah,
you.
it's a very, very good question. I like that question very much because that's the normal we get into with CPA need knowledge into it. A lot of CPAs don't have that knowledge, unfortunately. But anyway, so when it comes to the 1099 broker statement and comes to like foreign income declaration of foreign source income, and it has that the foreign taxes you paid, and you have to select an option whether to take a deduction or credit. Remember, it depends upon your total income as compared to your total scenario. So when I say total income means the amount of income that you're looking at to get a credit for. Because what happens is when you look into Form 1116, it's kind of a proration between worldwide income and the US source income, and looks into itemized deductions proration. So to take advantage of it, and also remember AMT come into picture, because AMT takes into it's a regular tax calculation, not a simplified tax calculation. For example, for interest and dividend, you get a qualified tax rate, what AMT takes out that tax rate. So it will again depend upon your total, what's the difference into dividend income versus your total income. But generally, to avoid any calculations and you're doing taxes online, not going to CPA, I will suggest you better to do it simplified election. Don't go into complex election, because complex election you might not put in the right areas, and there might be issues that one. So I will suggest you just select that simplified election and do it, and that software will do it for you. Okay. And I think you wanted to ask that question, listen to that offline. Thank you for that question. That was interesting question. 408-912-5038 is the student number. This is Sanjiv Gupta CPA. We are remaining 10 minutes for the show. Tax season, 5 days from now. Have listeners, just throw your questions here. I'm CPA, Sanjiv Gupta CPA on air. We have a caller here. Let me take this call. Good evening, this is Sanjiv Gupta CPA.
Yeah, good evening, Sanjeevji. This is Naman.
Hi,
I
Naman.
had a question about foreign life insurance policy, which is like a ULIP. It matured last year. I have been showing it on my FBAR filings, but since it didn't mature until last year, there was no income generated. So this year, I need to show it, I believe. As far as I know, it's not a PFIC company, and the total gains are also around like 5,000 USD or so. So I'm just wondering if other than showing it on my taxes as long-term gains, do I need to show anything else as far as this policy is concerned?
No, you're doing it perfectly fine. You don't need to do anything else. Of course, he sold it. It's not PFIC rules subject to that. So I will say it's fine. Whatever you're doing is excellent. I will suggest there's no need to do anything else. Of course, you remember that when you sell those ULIP and the money goes to your bank account, remember the bank account balance needs to be reported if it's more than $10,000.
Okay, so continue showing it on the FBAR, the bank account.
Yes, of course, you have to show that. Yes.
Okay. Okay, sir. Thank you.
Thank you very much. Listeners, we are into like 9 minutes for the show. 408-912-5038. It is studio number. When we talk about extensions, and I talked about estimated tax payment, you have to understand a few things. Number one, we are talking about extension for the individual taxes. So you have to look at your income levels for last year, that is 2021, and income levels for 2020 and 2021. So you look at it, total taxable income. If the total taxable income is higher for this year as compared to last year, then you have to look at the tax withholding requirements. Tax withholding requirements should be at least 110% of 2020 taxes. And if the withholding is less than 110%, then definitely you have to pay estimated taxes. You have to calculate estimated taxes on the difference in the income. And how to calculate the difference in taxes? I would suggest just take the federal withholding of at least 25% and state of 1/3 or 8 to 9% for California for the increase, and pay the estimated taxes with your extension. Like I said, extension is for filing the taxes, not for making the tax payment. We have a caller here. Let me take this call. Good evening, Sanjiv Gupta CPA.
Hello, good evening, Sanjiv Gupta ji. This is Arjun here. So I have a quick question. So I'm a W2 wage earner, and if I have a rental property, if it's in an LLC, right? Then, if I manage the property, I don't have a management company. Can the cash flow negative after the depreciation be offset against the ordinary income and losses?
So by definition, the real estate is passive. To convert to active, you have to really follow the real estate professional guidelines. Like you have to be a licensed, and all the 750 hours and other things are there, which I think will not satisfy in this current scenario which you have. What happens is when there's one aspect of the being an active professional. Then there's another aspect of AGI calculation. So if your AGI, if you're married filing joint, and your AGI is 150,000 or lower, of course you can claim up to $25,000 of that loss from that real estate. If your AGI exceed 150K, then you're not able to claim it. So it's between 125 to 150,000. You can claim some losses from the real estate based upon your AGI. Now, if your AGI exceed 150K, which most cases that happens, that losses will not be able to claim, and you will be carried forward that losses. But don't worry, your losses will not be lost, because your losses will be carried forward in subsequent year. When you sell that property, that a loss will come back and set off again. If still the loss is not able to set off the gain, then don't worry, the loss will come back and set off your other W2 income. So it's a hidden tax benefit which is always there.
Right, Sanjiv, but that's when you are owning the property, right? But if the property is an LLC, and if you're filing a return for LLC, then can the losses be offset against ordinary income?
That's a very good question. Very good question. Now, LLC does not change the nature of the income. LLC is more for protection, is one of the technique that we use for protecting the real estate, not for tax purpose. That's where the lot of people get this notion. Hey, form the LLC, you can do all the expenses and take the losses on your personal because it's close to your personal, but does not change. The LLC does not change the nature of the activity. Activity remains passive, does not change just because you formed LLC. Real estate remains the same. Whether you form LLC or corporation does not change the real estate nature. It remains the same. Okay. So it will be carried forward. Thank you for the question. And definitely we have a caller here. Let me take this call. Good evening. This is Sanjiv Gupta, CPA. Hello. Hello, sir. Good evening.
Hello.
Hello. Yeah.
Yeah, I had a question for Sanjiv Gupta.
Yeah, go ahead with your question. I am here.
Yeah, so my question is I had I was a government employee earlier, and then they used to pay me medical expenses, like the premium, like $200 or something a month. After I would get my insurance amount deducted from the paycheck, they would give me $200. So I left that state job in 2021 around October, and then that $200 was left. They did not give it to me for 8 months, and then I got that $200 or $225 in 2022, like October. So, and they did send me an amended W-2. Do you think it is required to file amendment of the 2021 taxes, or we are fine,
No. You have to report the corrected one, the corrected W-2, because that's the corrected W-2 which is there with the IRS system. So don't file with the original W-2. If you already filed with the original W-2, you have to amend your return. And the form that we use is 1040X. You amend the return with your corrected W-2, but you need to file it. Otherwise, IRS will send you notice for correction notice, and that may come within 6 months, but then you owe additional penalties or whatnot. So to avoid all those things, if you not file the return, go ahead and file the return with the corrected W-2. And
sorry, that was we received in 2021 October, but it was for 2020. And we had filed the return in 2021 for 2020. So now we received the amended W-2 for 2020.
So you have to amend the return. You have to amend the return for tax year 2020.
We have to amend the return for tax. And is there any time frame for which we have to do or do it?
So time frame is there. The time frame is there for amending return is 3 years from the time of filing the return. So you still have time. You can go ahead and amend the return before the IRS comes back and levies additional penalties or interest. So please go ahead and amend 2020 tax returns.
And 1040X you said, no?
1040X.
Okay. Thank you so much, Sanjiv.
Thank you. Really appreciate. We are now coming to very close of the show. So I just want to give some points here for the extension for, like I was talking about estimated taxes. So do for federal, like 25% to 30% of the increase in increase in income. Take that as income and multiply by 25 to 30%. That you should pay with your extension. And how to pay the extension? You can go to the website irs.gov and you can do the extension for tax year 2021. Don't choose income tax payment. Choose the estimated extension tax payment extension for tax year 2021. You can also do the same for for California franchise tax. You can go online ftb.ca.gov. You can go to the individual tax you go to that page and you can make the payments out there. It's very easy. It's not complex. But do select that box that says extension for tax year 2021. Don't say the income tax payment, because they will take that payment, and that happened in a lot of time, that payment in this year, not the extension, and then they get confused and then send notice and whatnot. With that, I just want to thank all of you to listening to my show, and hope you did all your tax return on time, and we'll see you next Wednesday, same time, 6:30 to 7 on Wally 92.3 FM. Thank you.
Thank you for tuning in today to Dollars and Cents, hosted by Sanjiv Gupta, CPA. Tune in next Wednesday and every Wednesday at 6:30 p.m. If you have any questions about the program or its related topics, you can get in touch directly with Sanjiv Gupta, CPA, by calling 510-825-7563. That's 510-825-7563, or visit sanjivcpa.com.